Hi there, Emmanuel here. So today we're going to be talking about swing trading indicators. Yeah, I'm going to go into some of the indicators that most people tend to use, and I'm also going to introduce you to the indicator that the group I'm with personally use. It's something called the ATH indicator, and I'll show you it in action. Do you know? So, and as well as that, if you hold on for a second, I'll actually show you how you can get access to the people that I personally trade with, 5, 6, 7-figure traders that are going to show you the two very simple strategies that we look for on a chart that are so easy to see, and so many people are getting so much success for it, and you can and you can actually come and trade that with us. We'll show you what we do exactly on the charts completely for free all of next week. So if that's something you might be interested in, I'm going to tell you a little bit more about that in a second. Right, so this swing trading indicator. So firstly, let me just quickly explain. Swing trading is more sort of higher time frame trading, where you're kind of getting into a trade and you're holding it maybe a couple of days, maybe even a week. Do you know what I mean? That's typically what we mean by swing trading. But I mean, trading's trading. You can actually use these indicators on lower time frames for scalping, but it's just that you need to understand the charts really well from that. Now, any type of indicator on a chart, I don't believe you should just rely on indicators. You know, if you don't know how to read a chart, then you're going to be in problems if you just rely on indicators. And this is what most people are taught. You're taught usually, I'll tell you the most common ones, and they're here on the chart, because this is how I was taught, yeah, before I met these guys that I'm going to give you access to in a second. I was taught with all these indicators. So this is my chart. So you can hardly even see the bars because there's all these indicators on there. There was the volume, there was the MACD, the 12 and the 26 and the 9. There was the RSI, there was the stochastics, and then even they had moving averages on the chart itself. I've just taken that off so that you can see it. Now you have all these kind of things happening before you get into a trade. Say for example, if it was a down trade, you'd need the volume, you'd need the MACD peaks going down, you'd need the RSIs crossing the 50, you need stochastics crossing over and then going down. So all these things needed to line up before you were ready to take a trade. Now if you think about that, this is what most indicators are what we call lagging. So by the time all these things have lined up, the price has moved. And by the time you get in, which is what a lot of people find when they're trying to trade with just indicators, by the time you're ready to get in, say for example, let's look at this trade here. Say this was an area our group actually went for a sell. I'll show you actually on another chart. Yeah, this was the area and this was the sell. And a lot of people in our group caught this, and I think they actually even gave this out on the free videos that I'm going to give you access to. So here it was. This is the push down. Price came back and triggered into there. Yes, I've still got my risk reward on there. Triggered into there and just dropped. Yeah, took a 1 to 5 from that. That was the entry. This is what we call a banker's candle on a box. One of the simple strategies I said we will show you. There's only 2 that we actually look for. Very simple pattern on the chart. Yeah, but so that's knowing a little. You still need to know a little bit about how to read charts, a little bit, and you'll be taught that. So imagine this is it doesn't look like it, but this is the same area right here. So I would have had to wait for the volume to rise. So it was starting to rise here. For this to cross over the 50, it didn't do that till here. For the stochastics to cross over again, it done that here. So already a third of this trade probably would have been gone by the time all these indicators told me that, yeah, it's time to get in. And what happens a lot of the times, you're selling now here when the price begins its little pullback, instead of selling when it's right at the point at the top, at what we call a banker's candle, and it's ready to go. That's the problem with indicators. And then when you add things like trend lines, support and resistance lines, and all this sort of stuff as well, that tends not to work if you don't know how to read a chart, you get really confused with all these indicators. You know, you can just, and some people's charts, you can't even see the chart for all the indicators. This is the way we used to trade, and this is the way I look at a chart now. Look at the difference. There's no indicator in here. There's no need to. But we do have one indicator that actually does help us a lot in the group that I'm in, and it's called the ATH indicator. And this is it here. So this is that same trade here, that big push down. I'll show you it here. That big push down is here, and then the area there. That was the area I was talking about. It came back up in, flagged in, triggered there, and dropped. So here it is on here. That big push down came back up, what we call flagged up into that area and dropped. And what the beauty is, we have an indicator called the ATH indicator, which gives you little arrows that tells you yes, it's based on our strategy and the configurations of the way we trade, but it gives you a little alert and says yes, this is a good place to sell. So there was that was that area. There was the come up. You could have got in here, or you could have waited for this ATH indicator, the only indicator that we use, because all this other stuff just makes the chart look messy and it's hard to see, and they're lagging, which is what most indicators are. Whether you're using them for continuation to go with the trend, or you're using them for reversals, they lag. They lag, so the price has already moved, and you're usually getting in on the pullback rather than getting in on the move here when the move is happening. So if you had waited on our indicator here, you would have got it here. So usually say when you get it there, just trade right underneath it. So trade would have been there, stop loss probably somewhere there. You can see that would have been a nice 1 to 3, 1 to 4. You know, the only thing is with any indicator, it's probably going to trigger later. I mean, if you knew how to trade, you would have got in here. An indicator is going to trigger a little bit later, but it's going to save you from losses. You know, this is one thing that this indicator that we have called the ATH indicator helps us with. If this wasn't the right area for the fall, you wouldn't have got the arrows, so you wouldn't have got into trade. But as it was, you waited on the arrows, you got in here, you would have caught all of that. You would have caught all of that trade there, easily a 1 to 3, easily as 1 to 3 or 1 to 4 increase on your account from one trade. You know, so and that's what we mean by indicators. This is why I mean the swing indicators that I use. Only one indicator I use now. It's called the ATH indicators. You know, and I just showed it to you in action there. And that's the only problem with indicators. I mean, they are great if you know what you're doing, but unless you get in a really big swing, and you really say you catch the swing, I don't know, a third of the move down with indicators, and then you catch the other 2/3, that's fine. But otherwise, they are late. They come late to the party, or a lot of them, like especially like support and resistance and trend lines. A lot of them things are even traps. You know, they just look very clean on a chart, and they're places where banks actually come and take your money. Do you know what I mean? So listen, if you want to come and learn this stuff with us and get access to this ATH indicator, because we actually give people the ATH indicator completely for free if you decide you want to be a member. But even if not, you can come and sit on our training. This is the training we have every single day, hour and a half. You can see each of them are hour and a half, hour 15, and you come and sit on this for free, where the leaders talk to you about the 2 simple patterns I said that we look for on the charts. They talk to you about this indicator. They talk to you about areas they're looking at the charts, and they answer questions. Yeah, so if you have any questions at all, you can they stay and they answer all the questions, and you get access to that completely for free. So if that's something you're going to be interested in, what I'm going to do, I'll leave a link to that underneath the video here. Just click on that link, and once you've opted in, you get completely free access. You get all the details to get completely free access to this training. It starts Monday, 12 p.m. Eastern Standard Time, which is 5 p.m. GMT, and it goes on all through the week. Yeah. So again, if that's something that you think is going to be of value for you, links will be below in this video, in the description here. All right, then. Once again, thanks for listening. I hope you got some value from this. If you did, please take a second, just give it a thumbs up. So share it with anyone else you think might get some value from it as well. If you have any comments on any indicators that you use, are there any indicators that you think, no, this is it, this is my combination of indicators work really well? I'd be interested to know. I'd love to kind of hear from what you think about indicators yourself. But okay, so if you have any comments, please don't hesitate, leave it in the comments box below. Until next time, you take care, and I'll speak to you soon. All the best. Have a great day.